Now, would you like to know how much passive income you could receive from a small investment account? We'll be looking at my personal SIP over a 3-year period, starting from investments of £25,000 for the first year, up to £36,000 in the second year, and then £41,000 in the third year. Stick around and we'll see how we did. Welcome to Destination Wealth. So today we're going to have a look at a 3-year period of my own personal SIP. This is back from 2013, 14 and 15 when I first started my journey into investing, and I was really kind of learning. So I was buying all sorts of stuff, selling, buying and selling, timing the market, which is something that I don't do now. Let's have a look at that first year and see what we brought in. So here we can see from January through to December of 2013, and I received dividends on nearly every month apart from December. They were small, started off at £53. The largest month was May, which was £191. This was on invested amount of £24,945. So my total dividend income for that year was £523, which was the equivalent of £43.61 per month. At the time, I was invested in 12 separate stocks that all paid me dividends throughout the year. Now, out of these 12 stocks, I currently, in 2024, only own 3 of them, those being Apple, UKDV, and Diploma. Now, the ones I don't own, one of them was bought out by another company, and the majority of the others I sold out as they were dropping, as most investors do. I got scared out of the market. In hindsight, I should have kept those because 4 of them, Renishaw, XP Power, Croda and Diageo, the drinks maker, are all massively up. So let's now have a look to see how we did in 2014, 1 year later. So you can see here that I received dividends in 10 of the 12 months. I didn't receive any in July and September, with the largest months being £164 in May. This equated to £612 in passive dividend income for the year, which was an average of £51 per month. Now, I still own 12 dividend-paying stocks at this point, but one of those was different. Kent's that I owned before had been bought out, so I had reinvested that money into a company called DIVIDEND, which turned out to be a bit of a disappointment, to be honest. So the portfolio in 2014 stood at £36,000. Let's now move on to 2015 and see what happened there. So strangely, in 2015, you can see that it was a very similar story to 2014. Largest month being £164, and the yearly passive income that came in was £612, exactly the same as 2014, at £51 per month. Now, the stock portfolio in 2015 was very different to the one in 2014. Around that time, I was still learning a lot about stocks, and I was buying and selling, and buying the dips, selling the highs, selling my winners, and putting more money into my losers. Now, what I did find is that when a stock dropped a certain amount, I just sold out, which some of them was a good idea, others was a very bad idea, as you'll see later. At this point, I now only owned 8 dividend-paying stocks, 4 of which I still currently own. The portfolio at this point stood at £41,000. Not a particularly great year for dividends compared to the year before, as it stood the same, but I had a lot less stocks. So I'd really started to focus the portfolio down to the stocks that I liked. Here's the actual SIP investment account from 2013 and the stocks that I owned at the time. You'll see some well-known names in there. Now, I was buying all sorts of stuff left, right and centre with, putting in the research, but not as extensive as I should have been at the time. So I was really getting excited about investing and just throwing my money into all sorts of stuff. As you can see, it finished at £523.35 for the year. Now on to 2014, and these are the stocks that I owned then. Very similar to 2013, bar one share that changed. A total income of £612 for the year, £51 per month on average. Now we can roll on to 2015, where things looked a lot different. I'd thinned the portfolio down a lot. The investments brought in exactly the same figure as 2014 of £612 for the year, or an average of £51 per month. I'd added Shell, I'd added Babcock, Diploma and Dragon Oil to the stock portfolio. Currently, I still have Apple, Ideagen, UKDV ETF and Diploma in the portfolio. Around the 3-year period, that's what I brought in dividends for the year, for each of those years. Now I was messing around, buying and selling and not really knowing what I was doing. I hadn't really found my feet in terms of doing the investment research that you should do. What we'll look at in future videos is the next 3 years and see how that developed, see what stocks I bought, see how the portfolio grew and what sort of dividends that was bringing each month and each year going forward, bringing us right up to date. So I'll do this in 3-year increments until we get up to 2024 today. As a little recap, we'll look at my combined investments. That was my personal pension in my SIP, my Friends Provident company pension, and my ISA. 2005 up to 2008, I only had a small company pension. In 2008, I opened a share account. In 2010, I also opened up a stocks and shares ISA, of which I started to slowly transfer the money from the share account into the ISA for tax reasons. So 2011, I had a share account, a stocks and shares ISA, and the Friends Provident company pension. In 2012, I decided to transfer everything I had from the Friends Provident company pension into a Hargreaves Lansdown SIP, a self-invested personal pension, so I could invest in the stocks and shares that I really wanted to invest in. In 2013, I shut down the share account and I transferred everything into the stocks and shares ISA. So by the end of 2013, I just had the SIP at Hargreaves Lansdown, the stocks and shares ISA with Interactive Investor, or the Share Centre it was called back then, and I also had a Scottish Life company pension. As you can see on this chart, in 2005, that was all my savings, up to 54,517 in 2014. I still really didn't know what I was doing. So at that point in 2014 was when I really started to get serious about investing and learning about investing and how to invest in dividend paying stocks for the future. In 2015, at the age of 40, I had a 19.5% gain on the previous year and an actual monetary gain of £10,660. That was just the increases, so that was dividends and capital appreciation for the year. In the next video, we'll look at 2016, 2017, 2018 and see how we grew then. As I really started to plug away money and get serious about learning about investing, I was becoming a much better investor and the increases grew substantially. If you'd like to know how right in the beginning I found the extra cash to start investing, then check out this video.